Hi everyone, welcome to this live coverage, and of course have a great 2016. But anyway, we have started here with a little bit of shock coming from China, right? The Chinese PMI manufacturing readings have been under pressure and declining and uh, below the 50 mark for 10 months in a row. That means that the economic continues contracting in the second largest world economy, and therefore there will be less demand for commodities, and therefore oil and gold will remain under pressure. And with oil under pressure, we will have inflationary issues across the world, and therefore we are not going to have rate hikes. And since we are going to have a really interesting 2016, right, guys? Anyway, let's take a look at the calendar first and see what we have scheduled for this week, right? Of course, I do believe that the most relevant is no doubt the non-farm payroll report on Friday, right? We are going to have December employment figures in the U.S. By the end of the week. But in the meantime, and considering that we have been on holidays for the past 2 weeks, the calendar is pretty busy these days, right? Although I do believe that there's not much pending today. Yeah, we have not much pending for today. We have minor figures in the US that I have removed with a filter. The fact is that so far, data coming from Europe has been quite discouraging, with both the euro area and German inflation released yesterday missing expectations, as I was saying a bit ago, still under pressure, still closer to deflation than to inflation, right? And that's not good news, because that means that no matter how much quantitative easing the ECB believes it's working and doing, it's not enough. So beware of that. Anyway, checking the day ahead, we have further Chinese data, services sector. The services sector has been a bit more uh, constructive than the manufacturing one lately. So maybe it's not a big risk what we have over the upcoming Asian session. But anyway, if a reading misses expectations, falls below 51, and not to mention if it's falls below 50, we're going to have another wild ride in stocks during the Asian session, right? We have also the release of services PMI in Europe earlier tomorrow. Again, the services sector has been a bit more constructive than the manufacturing one in Europe. But anyway, if you take a look at the Monday releases, the manufacturing PMIs for December in Europe have been pretty um, positive. So not much concerns coming from there. The ADP report tomorrow, the ADP will give us a clue of what may happen with payrolls on Friday, right? So beware of that. Keep in mind, it's not the best way to anticipate employment figures, but it will give us a first or initial clue of what happens. Also on Thursday, we have initial jobless claims and weekly jobless claim that have been slightly higher over the past 2 weeks. So that will be a better clue on whatever the payroll may bring on Friday, right? Because it's showing us what happened in the past 4 weeks. The continuing jobless is the average of the last 4 weeks, and this reading showing us that over the past couple of weeks it has been rising, right? Anyway, keep that in mind ahead of payrolls on Friday. The other relevant the data we have this week will be coming from Germany. I don't believe that Australian data will be that much market move or trade balance or housing reading. I do believe that we may have more action coming on Friday for European data, right? Because Germany has been in the eye of a storm lately, right? Data has been not that encouraging besides manufacturing PMI ratings. So if we have disappointment in the year, that may affect sharply the euro. But anyway, we are going to take a look at that now. Anyway, keep in mind that on Friday and with payrolls, we have also Canadian employment data, which means that trading dollar CAD may be not the best idea you may have, right? Because they can diverge, and therefore the market will so crazy spikes either side of the board, and you are not sure where or what to do with the pair. Okay. over the weekend we have inflation in China. And if we see this falling further, right? If this falls further, the market may open with gaps, big gaps on Sunday. So keep that in mind, and particularly favoring the Japanese yen, right? That's the one. I don't expect this to surprise to the upside. If it does, it will be interesting because then the dollar will gap higher against the Japanese yen. But if there's going to be a bad news and it's going to be surprisingly negative, then take a look at dollar to yen and Aussie dollar, right? The Aussie is also being weighed by whatever China sets. Anyway, let's change screens. Okay, let's take a look at the charts. That's pretty more interesting. Euro is breaking lower today. In fact, it's lowered since the ECB disappointed markets with its latest announcement, making the softer ever extension of quantitative easing, right? After all of the jawboning we had from Draghi, the fact is that early December they barely extended the quantitative easing in time for a few months. Really a disappointment, and that was the main reason why the euro uproar, right? Anyway, there we are at its lowest level since December 3. And I have this Fibonacci retracement. This Fibonacci rally measures all December gains in between December's lows and highs. And here we are breaking through the 50% retracement of that level, of that rally. Sorry, the 61 comes at 720 or so, 710, 720. So this is the level I'm looking for to be reached today should the dollar keep rising, and the level to break to talk about a more constructive dollar outlook for the upcoming days, right? Without risk aversion, without risk sentiment in the middle, the dollar is trading broadly higher today. And if the trend prevails during the American session, with actually yesterday, the market turned towards the greenback after US opening, and that behavior may be replicated today, right, will mean that we will probably reach this level. If we break below it, okay, I see a next probable target around 680, 660 area, but there's a good chance that slowly but steadily the pair can continue breathing lower towards the 500 price. So better, of course, if we have an ultra positive pair, right? That will be the trigger to take the pair that low. If pairs, on the other hand, disappoint, I would expect the pair to recover some ground. Yet, keep in mind that 930, 940 has been capping the upside, and I believe that this is the line in the sand for the euro dollar. As long as we remain below that level, the risk will remain towards the downside, and we will take a clear recovery above it to start talking about a more bullish outlook in the pair. Okay, and when it comes to pound, the fact is that it keeps falling, right? It keeps falling, and we are trading at fresh 8-month lows that is not seen since April last year, with the pair currently extending its decline today, right? This is just not about data or certain figure. I believe that it's market playing catch up, right? Because the market has been, this is a weekly chart, so keep that in mind. We have strong rallies in here. Anyway, market has been pricing in a rate hike during the first half of 2015 in UK, right? And all of a sudden, with disappointing data and a dovish Bank of England, chances diluted, right? And the market is playing catching up because it's like the pound has been way overvalued against the greenback ahead of such news. And with no rate hikes in the England in the way, the dollar should appreciate further against this pair. I'm looking for a test now of a 45.65 low, April low, right, as being a main target. I believe the rally is extremely overextended right now, because even the daily chart is showing oversold conditions. Yet, even though the pair is moving slowly and with corrections in the middle, I don't see chances of a bearish continuation even below that 45.65. In fact, I could suspect of large stops below the level because it's a major relevant low. Okay. And if we take that low, we can go all the way down to 42 over the upcoming weeks, right? Anyway, that's what I'm seeing in pound. In the shorter term, 47, 20, 30 area as is the immediate resistance. 47.80 is the next one. I do see some slight interest waiting in here. And above this level up here can go up to here, 48.50. But I would really like to see some steady gains beyond this level to start talking about a bottom, an interim bottom, and further gains over the coming sessions, right? Anyway, once again, we have payrolls in the middle, and that's a bit messy. But anyway, there we are. And here we have the Aussie. After a strong bearish run, we have been within this sort of not really completely symmetrical triangle ever since August, right? And we have been trading in between the bounds of the triangle for long already, and we can go up to continue trading in within the figure until February, right? And the figure will remain valid. But anyway, the OC has been slightly bullish ever since bottoming around 69 last year, but it's failing to accomplish the enough momentum to break higher and confirm that there's bottoming here. I'm not seeing much of an upward potential lately. The currency has been pretty hurt by news coming from China at the beginning of the year. And I do suspect that if we take the line, which also is the December low in the 71 price zone, okay, the market will give up. Bulls will give up on the LC, and the pair will probably return to the 69 level. Okay. I'm not seeing the upside potential at this moment. In the shorter term, in the 4-hour charts, we have the 200 exponential moving average capping the upside around 72.42.5. I would say that the level to watch in here is 72.40. Okay, as long as we remain below that level, I'm not seeing any upside possibilities. We need to take that level to talk about a bullish also, right? And on the other hand, in the short term, yesterday's low 71.55 is the immediate support level to take to see the pair declining towards the 71 region we were discussing earlier, right? And for dollar Japanese yen, which is also my favorite these days, been pretty interesting. Finally breaking lower. I see. We have been talking about bearish trend developing, increasing. The daily chart is showing us that the 100 simple moving average has slowly broke below the 200. Both moving averages are quite horizontal, which means that the trend is lacking momentum. The trend is lacking strength. The moving averages are not reflecting whatever happened over the last 100 and 200 candles, not just what we are seeing these days, and that's why they remain flat. But anyway, that's telling me that in the long run, we're still not there. We're still not confirming the breakthrough. Anyway, I could look at this low 1810, okay, the low set in October, right? As I would like to see the pair breaking below it to confirm further downside. 1610 is the low set on that Black Monday trigger, also by China in August, and that will be the probable bearish target. But I don't see much chances of an upward recovery here. For the moment, the market has turned bearish. Take a look at the smaller time frames are telling me that the pair will probably continue declining. Yet again, as an exception, that's what technicals are saying. Remember that we have payrolls Friday, and that can mess with technical readings. But in the meantime, the bearish trend prevails in here. Okay, below this low 1870. I do expect the pair to decline towards 1820, 18 region. Okay, those are my bearish targets. 1960 is immediate resistance, and I see that the pair has failed to regain the level early today. So I would like to see a candle opening above that 60 to talk about an upward recovery, but up to 2070. In fact, is the level to watch, as we really need to open a daily candle above this area to confirm that the bottom has been reaching here and there's chances of further recoveries. Still, I can't see that happening. I do see the pair still bearish. Another thing that is catching my attention these days is gold, because we have a huge rally yesterday, mostly triggered by risk aversion and the developments in China and the Middle East, because China economic slowdown was not enough. We have Saudi Arabia fighting with Iran over killing of Shiite. I'm not pretty sure what's the bottom line in here, but the fact is that war in the Middle East and tensions in the Middle East, from where oil is coming, it's not doing any good to the markets, right? In fact, if the situation escalates, that could mean that oil prices could rise, and that would be pretty positive for the economies, leaving aside the fact that we are talking about a probable war. Okay, anyway, let's go back to gold. I was saying that we have those risk aversion rallies that sent the commodity higher yesterday and keep it up today. But anyway, we're trading within December range. There's not much going on in here. I see the neutral stance prevails. There's a slightly positive tone in here, but not much. Nothing that confirms me that the recovery may stay. It's still, we have here sort of a double floor, right, in the 1045 region, but I'm not seeing much momentum, nothing confirming me that the right can extend. I would like to see the commodity regaining 1090, even 1109. Far away. Yeah, that far away. It's the level I'm watching. Okay, 1110, let's say so. I would like to see the commodity above this level to talk about bullish rally. In the meantime, this intraday recoveries, its advances or risk aversion triggered rallies are for me selling opportunities. Okay, mostly with tight stops above this 80, which is December high. Okay, I was following also European and American indexes today, and the fact is that they are back under pressure. And as I was saying earlier, yesterday stocks plummeted, and usually when the DAX falls, right, the euro rises. But anyway, we had plummeting stocks, and the euro gave up around after a brief advance. So, and later with the US stocks breaking lower and Dow down 400 points, the dollar advanced, right? So I would expect the situation, and we are seeing the same going on right now. So that's the scenario I'm expecting for the US session today, right? I don't see much to add today, guys. So I do believe that's it for today, right? Anyway, stop sharing. I believe. Yeah, there we are. Stop sharing. Okay, anyway, I believe that's it for today. We will be covering live the announcement periods usual on Friday, probably with Dale. I hope you can join us, and I hope you all can join us too. Anyway, that's it for today, and hope to see you back soon. Okay, have a great trading week. Bye bye.